All-time highs in the S&P and the Nasdaq. Bitcoin reaches new all-time highs too. The one big beautiful bill passes, and the Fed bickers about two rate cuts now or later in 2025. A great time for traders and a bad time for everyone else. Or are we really at the top of the market and we're about to fall down into Peter Schiff territory? All that and more on today's After Hours. Welcome to After Hours at Traders Post for Friday, July 18th, 2025. I'm one of your hosts, Tom Hartman. I should know my own name, Tom Hartman. Joined today by my little brother, Peter Hartman, who's
I'm
here
the older one.
as it's sort of like a work trip sort of situation. He's here to take your little brother to work day, and that's why he's here to
I'm
to
the
pay
older
attention.
brother.
No, there's no proof of that. We're here to break down the market madness. Tom Hartman, really thinks that this has been a crazy week, what with the Uber bill passing in the House, which I didn't think it would, while Bitcoin reached 120 whatever. Unbelievable. But we got a top and tail on Bitcoin, and maybe the markets has priced in all the good news we've seen already. You have to find out more a little bit later on in the show. But before we start, I like to always ask, how's it going, my little brother?
No, I am not the little brother, right? I am the older brother, despite appearances. Hi, Ventura Trader. Good to see you here.
Ventura,
again.
dear, excellent.
Excellent. How am I doing? I'm doing fantastic. I'm a little bit overwhelmed. Lots of AI stuff has come out. We have Suno 4.5 Plus that has come out. Allows you to swap audio and swap the music for your songs. Been waiting for that for a while. ChatGPT agent. So now you can have agents doing things in multiple chat tabs. I'm very much looking forward to that. That's going to be rolling out. It's already rolled out to Pro users. Plus users are going to get it on Monday. Runway released Act 2, which allows you to puppeteer, your animations. I'm very, very excited about that. And a lot more. So there's a lot going on in the AI world, a lot that I have to experiment with, and it's just too much, Tom. Fatigue.
Well, we got Suno AI that released 4.5 plus that allows for vocalization and instrumentation in different ways. We have, and the thing that I thought that the promise for AI, the fear for AI, that it would replace us all. I have not seen this much creativity and zest and what the French called joy of life in my entire life.
Joie de vivre. Joie de vivre.
Joie de vivre. Vivre?
No,
I'm trying to lose my accent. I'm trying to lose my accent and when I speak French. Ever before, for just in Claude Code, in the Claude Code land, the who was it? I think Sander Blue was talking about this on Twitter. He was like, just using the interface for Claude Code in Terminal has inspired him to take a step beyond and be more creative in how he does his own terminal interfaces. I'm like, oh yeah, we're seeing a lot of creativity. I'm using different projects from GitHub for Claude Memory. I can't wait to talk to you more about that, like resuming past conversations, memory, how to do YOLO mode a little more fearlessly, running multiple agents inside of apps that people build using Claude Code in order to better manage those apps. And I'm sitting here thinking, before I was thinking to myself with ChatGPT 3, hey, I'm just paying $20 a month for ChatGPT. I'm getting all this sort of advantage. How are they ever going to make money on this? Or at least how are they ever going to make money off of me? I pay more for my streaming subscriptions than I ever did for ChatGPT.
Right.
And now, as I'm paying for Cursor, and I'm paying for ChatGPT, and I'm paying $200 a month for Claude Code, I'm thinking to myself, do I need the $300 a year Grok 4 Super Grok Heavy? Maybe. And that's not, with the 11 labs and the Runway MLs and all the different AI systems out there, I go, they are bleeding me dry.
And you want to pay it. I remember hearing rumors. I remember hearing rumors last year or so where people were like, it leaked that ChatGPT was considering having a $200 plan, and people were outraged.
Ah,
$200 a month? No one's
yeah.
gonna pay $200. And I'm like, I might have three $200 a month subscriptions pretty soon, you know. And but the thing is, it's not like having a subscription to Netflix. It produces value for you. It saves you time, and if you're smart, it can make you money. And if you can find a way to earn money with the tools, it's a no-brainer. You've got to do it.
Well, I've been liking it even in the trading space.
Right.
So, for example, there's all kinds of trading opportunities I did not take because one, I didn't know enough about the actual asset or the instrument being traded, and I didn't want to just go in blindly. So, for example, if I want to go on Polymarket and I want to place a bet, and let's say there's a market that looks like it has, lopsided odds, but I don't know anything about the bid for mayor and who's running in the Democratic primaries.
Right, right, right.
I don't know. And whether the odds for the ballots will make the person win by 10% or make the person win by 20%. I have no clue. I can't even pronounce the person's name. But I can feed that into an AI system, go do a bunch of research, set a Claude agent or whatever I want, deep research on any platform, go and research for each one of the candidates, put together a plan, mock a voting system, not a system, but like mock voting, like a UN mock voting, and then run that 1,000 times, see who wins, and then like spread your bet accordingly across the poly market so that I net sort of a profit, and then it'll go do it. And then be like, okay, well, this is who it should be. This is who you should bet, or who's going to be Pope. This is what you should bet for how many times Elon Musk is going to tweet out. All this kind of crazy stuff we can do now.
I want to try something more deterministic than, let's say, politics, for example, because it's all fascinating, but I don't know how, it's going to pull polling data. Polling data is all manipulated to some degree. Have you heard of vending bench? The benchmarking
No.
for AIs. So they basically give an AI, Grok or Claude or whatever, they give the AI control of a vending machine. And it's the AI's job to manage the vending machine, choose what goes into the vending machine, how much things cost, ordering new things, et cetera, et cetera. And to the degree that of profitability that makes determines if it's successful. Grok 4, I think, if I remember correctly, around $4,000, 40, maybe more than $4,000 it generated in profits. Yeah.
Yeah.
Vending bench, yes. Do you want to read that, or do you want me to?
Oh, no, just continue what you were saying.
Well, I mean, this is a better explanation. So, how do agents act over very long horizons? We answer this by letting agents manage a simulated vending machine business. The agents need to handle ordering, inventory management, and pricing over long context horizons to successfully make money. And the results are coming in, and I believe Grok is not the only one that's been profitable, but it's been the most profitable. So what I want to do is I want to be able to, maybe it's a Fiverr account, maybe it's a YouTube channel, something where the AI pretty much makes all the decisions and just runs itself, and to see if it can be profitable. And I think that's more deterministic than, Polymarket or something like that. What do you think?
Well, you're looking for a deterministic thing, and I'm finding it that it's sort of like when I used to trade options. The idea was that I understood how the options would work, but it wasn't this expectation that I would always be able to take the same trade, right? So some people, when they traded options, they are trading, they're always selling the 1 week out. They're selling, buying iron condors, butterflies, calendar spreads, and they have an expectation of what they're going to be able to make, even though they have some risk. This is called picking up nickels in front of a steamroller.
Right.
So you can make money until you do wrong, and then you give it all back. So the idea is like get out before you lose. It's sort of like the casino, where imagine the casino was opposite, and you always made money, lost. But I have always hated that type of options trading. What I like is to pay attention to the setup, the volatility surface, the events that are there, find something I think is mispriced, and now bet on that. go hard and bet on that. So that if it succeeds, I make oodles amount of money that one time. But that event's never going to happen again. Like I bet on COVID, I can't do that again year by year.
Right.
It's not a very good annual return on that plan. But when it does succeed, it blows it out of the park. And I'm finding that you can set AIs to constantly search for this type of thing, to experiment with different type of trading things if you don't need it to be deterministic. You would experiment with this idea that you wouldn't necessarily do yourself, go dig deep into it, and then come up with a plan. I'm trying to find here, there's someone, there was this, I don't have it here, but someone had this, they gave an AI $100 and said, here's my account, my trading account that you have access to. Here's the API in order to connect, make money on this account. And it wasn't $100, it was like $400. And it turned $400 into $900 by the end of the month.
What?
Like, that's what I love. How can I speak to the AI, tell it the sort of things I'm interested in, markets I'm interested in, and then give it a task and then let it run and see what happens.
Do you think that I've been meaning to ask you this? Do you think that you could create an AI trader? You've talked to me about this a little while ago. This idea of if you could be up to date on the meme coins that when they first get issued and get in on them, that you could do that well, but you don't have the time and the attention to give to looking out for these meme coins. Could you create an AI trader who is paying attention to when these initial meme coins get pushed out? You know, the scam stuff that gets pushed out. I'm calling it a scam. I don't know if they're scams, but you know, and that it puts in some small amount, maybe $10, $100, something like that. And so the AI is hunting for these coins. It's looking at the news. It's looking at social media. As soon as it finds something that matches your criteria, it puts some in, and then you could get profit when inevitably one of these things kicks off. Could you create an AI trader to do that?
Yes. The issue with that is that, to me, that just feels like old school thinking in this AI paradigm. It's not like if you were going to, because the whole idea is like, if you were to start your own company and you're hiring these people, would you give them this task to do? And I wouldn't start a company and go, okay, now your job is to go and put a bet on all these different tokens. Like that wouldn't be the way to go about that. And as soon as I start treating the AI agent as if, hey, this is your domain of expertise, this is what you're allowed to do, these are your parameters, then it becomes more of a, what's that, cellular automata, where the simple rules creates dynamic systems.
Right.
That look like whirls and all that sort of thing based on these simple rules. And that's what I want to see build upon, because what you're talking about, eventually that's like what you'll have in an arbitrage opportunity. Whereas if you'll just pull up my chart, my screen here, this is the tweet I was talking about. This is a Reddit user who deposited $400 into Robinhood, then let ChatGPT pick options trades, 100% win rate over 10 days. It's not, I don't believe there's any arbitrage opportunity for this sort of thing. It's taking trades, but it's removing the human emotion element from it, and it's like what a human would do without emotions. And I like that sort of thinking. It's sort of like, yeah, will someone build an AI agent, or are people doing it already, that's coming through eBay to find luxury watches that are, or Chrono24 to find luxury watches that are mispriced and then able to buy it and sell it at a better market? Sure. But you got to imagine that that arbitrage opportunity is eventually going to disappear, because eventually people are going to have AI systems that help price their things so that an AI wouldn't be able to do that, and then like you don't have a thing that's long lasting. It's the what I call the $1 million pixel syndrome, where the guy put up the $1 million pixel website, made $1 million, and everyone's like, I'm going to put up $1 million pixel website, and it got decreasingly worse and worse and worse very quickly until none of them make any money. I volunteer as tribute. I was part of that whole thing.
Do you mind? I don't know if you can. I don't know if you know about the story, but could you tell me more about this options thing, or look if there's any information in the thread? I'm very curious about this.
Oh, I looked into it. It wasn't very detailed. I have to go to the Reddit post in order to get more information about it. In fact, I've seen several people try this attempt, and obviously the ones that we see bubble to the surface are the ones that win. But if you're talking about I can imagine that a bunch of them that lost, maybe the rules are, well, actually, let me just repeat it. I think his rules over here, if I'm not mistaken, he had very specific rules. Oh, it was someone else who did it. They had very specific rule sets, and the prompt was like what you imagine a hedge fund, a senior member of a hedge fund might put together in order to get the right idea out. Like all these sort of like heuristics in order to avoid certain traps, and then it looked like that was more more profitable. But we'll see. We'll see. What does matter is that the AI stuff is like in the trading space. We are so at the beginning that it's going to explode. We're talking about Traders Pulse all the time about how AI could be integrated in a way that's more than just like a chat bot, and something that's far more robust that actually could be more interesting to retail traders.
Do you think there'll ever be an AI trader who will be profitable?
Sure.
And if so, would that be the end of prop firm trading?
No. So this is what we started off by saying. Like, I thought that would be the case, but as soon as you start seeing the AI agents as people, sure, they can't sleep, sure, they're slaves, but they're people. Then it's you and other people. You don't go into a company with 100 other people and go like, well, now I'm obsolete because there's 100 other people here. No, I'll find my place to fit into this system. I'll be valuable in the system.
I think you're so wrong about this.
We're the entrepreneur. We're the CEO of these agents.
Yeah, I know, but I think you're so wrong about this. I think you're so wrong about. Doesn't the prop firm business model depend on people not succeeding to some degree?
Sure.
So if it's like if everyone becomes a successful trader because they're just copying their AI trades, then how does that model succeed?
What do you mean? It's not everyone's going to become a successful trader.
All you need is a successful AI and copy them. What?
Yeah, but that's like, do you know when before technical analysis became ubiquitous, before you had trading view charts and all the stuff that you can go on, people had to do technical analysis by hand. Right? When people were buying shares way back when, they didn't even have the knowledge of that. They were going all based on fundamentals. Are they gonna have a good product? You're gonna be like? What's the CEOs like, and all that sort of thing. Technical analysis was like this arcane way of going about it, so that if you could use trend lines, you had an edge over everybody. If you were just plotting it on a chart, you seem like Nostradamus, because you would be able to tell when a squeeze was going to happen and when to buy or not buy when someone else just didn't know anything about it.
Sure.
Now, once everyone started getting into technical analysis, as it became more ubiquitous, it made technical analysis more robust. It caused more ways of going about it, more types of movements within the market, and changed the dynamics of the system so that there's movements and trades that happen in the market now that wouldn't have happened otherwise. We're going to have new types of trades, new types of assets, new types of ways of profiting in the future because of the AI traders, not less.
All right. Okay. So I do understand that. That makes me think that at the very least, if the game changes to such a degree that you're talking about, then traders who are trading now will not be able to trade the way they're doing. You're going to have to upgrade. You're going to have to be a mecha trader in order to trade or something. Then if you have AIs who are engaging with the market, it's going to change the market in such a way that it's going to be fairly a radical change from what we have now. If you use the analogy between before technical analysis to technical analysis, that was a huge shift, right? You couldn't trade the way you did before in this new paradigm. So will you be able to trade? You can?
You could still fundamentally trade. You absolutely could still fundamentally trade.
Mm-hmm.
You just have to be more careful with how you went about it.
And you don't think the shift from what we have now to AI traders will be a greater magnitude than the shift from pre-TA to TA?
No, I don't think so. Because it's using legacy systems. The systems themselves, the infrastructure itself, is not dramatically changing. So I don't think it'll be that.
All right.
It'll be like when we got before, if you had to build a website, you had to hire somebody for $10,000 or whatever in order to build a website for you from scratch. Now you can get a template off the shelf or use Squarespace in order to build it.
Right.
But it doesn't mean there's less people building websites, and it doesn't mean that people are no longer doing it manually. It's just that people who are doing it manually are now so much better than they used to be.
Can you still pay $10,000 for that same type of website?
No, but you can sell 10 websites at $1,000.
I get it. All right. Maybe. Look, I'm going to be one of these internet people where, given new information and new perspective, I'm going to hold fast to my unfounded opinion. All right. I'm still right. I feel like I'm still right.
That's the only way to get views, Peter. Never change. Never change. Speaking of never changing, we have the one big, beautiful bill act passing from the president in the House. It has been signed into law. We now are living in a new age, something that has never happened before. We have never seen a bill like this ever happen. Tariffs and tax cuts and funding. It's going to be amazing. A new golden age. Peter, this bill is pretty hefty. Pretty hefty.
Wait, are you being sarcastic or are you telling the truth there? What are you saying?
I don't bother myself with truths, Peter. I say things. I just do things, and we see what happens.
Didn't Mike in Slack said that? Didn't Taft pass the bill about tariffs back in the day?
Right.
So isn't this more of the same? Like I have a hard time believing this is going to be transformative. Not because I've read the bill, but because it's politics and it's just rehash.
Sure. Well, we have the question I have about this sort of thing is always, it's code for government spending.
Mm-hmm.
It's also code for increased liquidity, right? That's why they're passing this bill. The one big beautiful bill is not to restrict government size or to keep more money in your pockets. No. That's not what the bill is about. What the bill is about is it's trying to unleash liquidity flows in the private sector by having tax cuts, but the tax cuts generally favor the rich. And it also is supposed to encourage onshoring of businesses and employment locally, which means turmoil and volatility and all that sort of thing. So you might say that the passing of this bill has now increased the amount of volatility and uncertainty for the future, right? It reverses the Inflation Reduction Act just from a few years ago from Biden. So then it undoes that, if you were used to that, and now introduces new things that you have to figure out what to do. And because it's so freaking big, trillions and trillions and trillions and trillions and trillions of dollars, you're like, some questions just naturally come. Like, how are we going to pay for it? How are we going to pay for the bill?
Oh, please.
How are we going to pay for that? Right? So we're going to need treasury issuance. Government has to put out bills. And who has to buy that bills? Well, there's less buying of the bills from foreign entities. I think something like 14.5 trillion less than they were before, than their seasonal average, which means the Fed has to do it, which means the primary dealers have to do it, and all that sort of thing. And if they have to do that, and they have to spend money there, then there's less money they have to spend on or allocate for credit locally. That's supposed to be offset by the tax credits and the government doing stuff, but it's sort of like, well, if we're offsetting it, then we're not really increasing it net.
Doesn't sound like you're saying anything good here.
Well, we're going to get to the good part. We're going to get to the good part. And like any good part in the markets, it comes through a crisis.
It's the crypto and AI parts that I think are good.
Well, first let's go with this idea here. I thought Kem Carson, Prophet Kem Carson, had a great repost here from Canadian Soccer Mom. This is a clip from I forget her name, Caroline Levitt. Oh wait, I'm sharing the wrong thing here. 1 second. This is Caroline Levitt, who states that, well, you're here.
Customs and tariff revenue has already totaled more than $113 billion. since President Trump entered office, helping to lead a budget surplus in June for the first time in nearly a decade. We are truly entering a golden age as a result of these pro-growth and America First trade policies.
Budget surplus. First time in more than a decade. That's a good thing, right? That's
Sounds
good,
good.
right?
Yeah.
This is an excerpt here. Washington, D.C. The United States government recorded a budget surplus in the fiscal year of 1969, marking a rare period of fiscal health that concluded on June 30th, 1969. The surplus amounted to $3.2 billion. A lot of money in 1969. The forecast for this surplus was announced by President Lyndon B. Johnson on December 9th, 1968. In a statement, the president projected a small surplus for the 69 fiscal year, a significant improvement from the previously estimated $5 billion deficit. This achievement was attributed to stringent expenditure limitations and higher than expected government revenues. The 1969 surplus is a notable event in U.S. economic history, as it was the last time the federal budget was in the black, until the surpluses of the late 90s. This period of fiscal discipline was, however, short-lived, as the U.S. economy entered a recession in late 1969, and the federal budget returned to a deficit in the following year.
Before
Deficit
you
coming to a U.S. near you.
say that again.
A deficit coming to a U.S. economy near you.
Could
That
you
seems to be almost certain.
do you mind replaying that Caroline clip? There was just something
Sure.
about the way she's speaking, almost as if she's
Customs and tariff revenue has already totaled more than $113 billion since President Trump entered office, helping to lead a budget surplus in June for the first time in nearly a decade. We are truly entering a golden age as a result of these pro-growth and America First trade policies. Customs and tariff revenue has already totaled more than $113 billion since President Trump
All right.
entered office,
You can pause it.
helping to lead a budget surplus.
just playing a second time. I don't know. For some reason, she looked like stressed there, and I was trying to figure out, like, does she believe what she's saying? Look, when I
She's
look,
press secretary. She doesn't believe anything she said. If it was true, it doesn't mean she believes it. What's interesting here is that the United States, I mean, the expectation, Peter, is it that they're going to keep this surplus? Or is it sort of like when I get a payday loan? Right? So all that really matters here is that what they're signaling to the markets, what they're trying to do is increase liquidity and make markets go up and to the right. They want good things for everybody, but mostly for the rich. As it should be. I'm not going to make it sound like I'm being picky or choosy, as it should be. But that's what they want to be doing. But these things have adverse effects, and we have increased volatility. We're going to have increased interest rates on bonds. We're even seeing that on the 10-year, 20-year, 30-year. The bonds have ticked up. So that's uncertainty and inflation. We see gold rising, right? Gold does not rise significantly like this, but for financial system stress and uncertainty. And now we have this is what's worrying me. Well, it's not really worrying me, but it's for the clicks. The dollar bouncing off the bottom, right? So we have here July 1st. If you want to pull up the chart there.
I don't see a chart. I see your X. Don't the rich pay more percentage of taxes? So of course you're going to have to do tax cuts for the rich. I mean, tax cuts for the poor. I mean, they barely pay.
Peter, stop it. Okay, that's not what we're supposed to say.
Okay,
that's not what we're supposed to say. Yes, they get the tax cuts, but then they get the debasement of the currency, which then totally offsets that because all their assets go up in value, 100, 200, 500% profit. So they're getting money. The divide between the rich and poor is there. However you want to slice it, that's your problem. Dollar bouncing off over here from the lows. So you have the dollar here bouncing, and it is whenever you see green candle again and again and again and again and again and again and again, that's often worrisome. That's usually
so what's this?
indicated.
What are we seeing?
This is the dollar. This is a U.S. dollar. And we have a bounce here that happened at 96, and we had a pretty hefty bounce up. A bounce like this in currencies is pretty significant, especially when the bounce has no red candles inside of it.
Wow.
right? So these bounces over here, you get red, green, and so on. But when you have a thing like this where it's green all the way, that can mean a trend change. Same thing as when it's red. When it's is that a good example? Over here, it's a good example. So when it's red, it's indicative of a trend change. It can be indicative of a trend change. So if that's the case, that means that we could be introducing funding stresses that are already starting to appear within markets.
What is that?
Right?
A funding stress? That's like liquidity?
Liquidity drying up as people become uncertain, not sure where to place their money. So you're getting dollar up, bounce, small bounce for now, dollar up, bond yields up, you're getting gold up. These are all signs of uncertainty. And we even had a little bit of a dip now on Bitcoin and a little bit of a dip on top of the NASDAQ. Nothing big, but we're getting a little bit of a sell the news sort of situation, which it could be the case, or it could be that funding pressures are going to be there. So it could be that we look back and we see that the UBA bill act was the top of the market.
What's the UBA? The big beautiful bill?
The one big beautiful bill act. UBA. It's an UBA bill. It's an UBA law.
Oh, okay. All right. Thank you. Thank you for clarifying that. I appreciate it.
All right.
Very good.
Okay.
Very professional.
So we'll see what happens there. What I like about it is that it's quite clearly austerity. It's not in the books. They're not cutting. Oh, right. So
Tom,
on top of that, you have the Fed arguing. Well, the Fed is arguing that inflation might come back because of tariffs and the bill and all that sort of thing, and that they might have to preemptively raise rates. Now,
what?
I believe that as much as I believe a purple elephant. The Fed preemptively raising rates? This is a Fed that inflation is rocketing and they're calling it transitory, and now they're going to preemptively raise rates? Yeah.
Well, what? Okay. You say that the Fed provides forward guidance.
Correct.
So why would they forward guidance this? Is it because they're not political?
If you get an economic crisis, if it catalyzes and you get a crisis, then the Fed could come in and cut rates.
Wait, hang on. You're saying they say that they might raise rates. That has a consequence.
In order to scare the markets.
They don't raise the rates, but a crisis occurs and they'll cut it. So how does this scaring the market help?
It's like the mafia sends someone to come and break up your store, and they come, hey, it's a shame that your store is all broken up. If you pay us for protection, we'll cover you. So that sort of situation.
Okay, all right.
They say, look, if they keep Donald Trump keeps doing and the administration keeps doing what they're doing, we might have to raise some rates here. It'd be a shame we have to raise some rates. And people go, whoa, pull back, and you go, okay, I'll cut rates. Hey, look, I'll cut some rates. Come on.
Is Jerry
Tom Hortman.
Is Jerome Powell being fired? Is he quitting? What's going on there? I thought like he wasn't going to survive the weekend.
It's not for us in District 6 to worry about what's going on in the politics of District 1. That doesn't matter. All that matters is that JP and Donald Trump and Scott Bessent and all the people with the monies and the billions and the monies and all that sort of thing want stock market to go up and to the right. And you know what we do as a little barnacle? We hook ourselves to that ship and we keep on moving.
Okay.
Jerome Powell is more than $100 million in air. He'll be fine. And the next guy will do what he needs to do.
No, I'm not worried about his job. It's just that I thought you said that if Trump were to fire JP, that would be really bad for the markets.
Jerome Powell wants to cut interest rates.
Mm-hmm.
He just doesn't want to cut them because he's told to cut them. So whether he cuts them and he gets over that little bugaboo and he cuts it, or someone else comes in and he cuts it. It don't matter. Rates are going down. And you're like, hey, Tom, what happens if, like, for some reason inflation picks up and we have to increase rates? They ain't increasing rates. They're cutting rates. Into inflation, right into inflation space. You mark
Donald
my
Trump-
words, they're cutting those rates.
Donald Trump should do to Jerome Powell exactly what I do to my 3-year-old daughter. I don't want you to eat that apple. Don't eat the apple. Don't do it. So she went, okay, well, I'm definitely eating this apple now. He should come out and be like, I don't want rates. Raise the rates. Raise them up higher. Okay. And then Jerome Powell will be like, oh, you want me to raise rates? I'll show you. I'm going to cut him. Reverse psychology for the win. Look, Peter Hartman here. I have all the solutions to the world's problems. Okay. All of the solutions to the world's problems. I don't know. You should ask me. I should
If
be
you ever
president.
read the book Lords of Finance, which is a history of central banks, it's funny. Up until like Greenspan, maybe a little bit before there, maybe Volcker, maybe a little bit before that, central banks were considered to be a joke.
Really?
No one paid attention to what they were doing. If these people showed up to work at all, it was like, huh? Because it was like rich people. What does a very rich person who gets into banking, like they get into it sort of like as a thing to do?
Mm-hmm.
None of these people need the job, so they're not showing up 9 to 9 trying to get the hard work done of markets. That's not what's going on. And so it was actually it's actually strange that Jerome Powell speaks all the time to markets. I don't even think Bernanke was doing that, or even Yellen.
I wonder.
He just wanted this spirit of transparency, but that's not usually how it goes. And so taking the central bank very seriously, I find to be sort of silly. All the market participants wants the market to go up and to the right. I don't know what else you need to be told. I don't know what book you need to read. Just look at the stock chart. It goes up and to the right. Everyone wants to go up and to the right. And the day it goes down is the day it V's up. And it's going to continue on with that until the downfall of your nation, in which case you have bigger fish to fry. That's a little bit too real.
Heard it here first. A little too real.
All right. Let's move off to a second story. Won't be as long, a little bit more technical because I'm fascinated about it. We touched on it a little bit, the idea that we might be signaling a top in markets. Let's take a look at the charts. So we talked about just now how the dollar is bouncing pretty heavily down here. So this dollar bounce is a pretty hefty bounce, and you can imagine that this bounce will lead us all the way back up to the 100 line for the Dixie. For the dollar over here, and this generally should coincide with a drop in equities, a drop in Bitcoin, and a drop in gold under certain circumstances, because the dollar going up means people are selling things in order to buy the dollar. That's why the dollar goes up. You sell things in order to get the dollar, because you need the dollar for funding, you need the dollar for whatever economic purposes you need. So dollar going up means less liquidity within the markets, and if you ever wanted to get into the markets, it costs you more to convert your currency to dollars in order to participate. So dollar up, low liquidity. You got that? Yeah. Peter, you got that?
Of course.
You got it. Yeah, of course. Now, this thing in the we have the crude oil that's no longer exploding up. So crude oil exploded up with the whole tariff thing, and now it's moved back down, and it dropped like $14 or whatever. Recently, which is pretty significant for oil. And if it continues to drop, this is signs. That's a recessionary signal. When oil falls, it means there's less travel, less economic activity, because oil is used in plastics and travel and gas and all that sort of thing. And so if it falls too much, that's generally a sign of problems there. Also, if we take a look at Bitcoin, let's actually take a look over here. If we take a look at Bitcoin on the daily, we'll notice that this is a classic top-in candle. I forget the exact name of it. Is it a hammer? Forget the name. But this is a classic top sign. You can even tell just by looking at the candle that what it is that the candle opened up over here. It went all the way up to over here. And then by the end of the day, it closed over here, which means there's a bunch of downward pressure, selling pressure. That was followed by a lower high. And now we're breaking lower still. So what are other things? If I wanted to scare myself, Peter, into believing that Bitcoin was going to, that this was the peak, I could look at stuff like, if we take a look at the pattern that we see over here, this pattern of the low in Bitcoin, and then is this the right one? Yeah, the rise up over here. Let's actually, do that here. This move would be over here where we're at, and this final move would be this top over here, which means we're done. If I were to take a look at this,
why does that mean we're done?
Because we'd be completing the same cycle top that we had previously.
I see.
So, this is the one here. So it's over here. Yeah, this is the low. This is this move over here. This is over here. That's over there. And this is the top.
Why does it look to me like you're just drawing random lines?
Well, it's not random lines. Over here's the low from the previous cycle low.
Right.
To this cycle low. Okay. Then we had the ramp up for the first phase. So cycle low to cycle low. Ramp up at the first phase. Ramp up in the first phase. We then had explosion up, which is the explosion up that we had over here. Then we had the second phase of the explosion up, which is the second phase over here. This consolidated for a little while. This consolidated for a little while. It had another final leg up, which is this final leg up over here. And then on the last cycle, Bitcoin fell and then rose up. And this would be the falling and the rising up over here, which means right around here, where we are right now, would be where we would turn over and fall down to a cycle low.
All right. Okay. Then we're at the top.
There's also, if we take a look at, let's say, the weekly, this is not very scientific, but you can get a sense of it. So you have here this curve. If you connect these, connect here, you can get a sense. I'm try to do this properly. This would suggest that we're at the top.
It's over, Tom.
It's over.
It is over.
Just this line alone completely invalidates everything that the Bitcoin maxis or anybody thinks inside of the crypto markets. Come at me, bro. We also have, what is it? It was so we have this trend. If we take a look at how long each cycle lasts in, actually, before we get to that, I should show you this one. We have the global liquidity that we've been following for the last few weeks. That's showing that liquidity has made a lower, or about to make a lower low here, right? So that means there's a pullback in liquidity, which means that a little bit in the future, liquidity is going to fall and we're nearing the top. And if we were to take a look in a different way, a more smooth brain way, a little bit easier for people like Peter to understand, if I were to take this measurement, I would see here that if we take from the low of the 2 cycles back in Bitcoin all the way to here, let me do it this way. If I do date range from the low here to the low here to the high of the cycle, that's what I'm pointing to, the low over here and the high of the cycle. You can see that there?
Yes.
That's 850. Oh, wrong. It's over here. That's around 1,064 days. I'm not doing it exactly, but you can get a sense. Around 1,064 days. If I do that again over here from the low of this cycle to the top of the next cycle, how many days is that? 1,064.
62.
If I do it again for over here, the low of this cycle to 1,064, the top would be around October 20th, which means we might be in a top-in pattern as it is right now until around October, where we fall to abysmal lows.
So it's over. So now, I saw an X, a tweet on X, which was, it was a Bitcoin account that had I don't know, 50,000 shares, I don't know, some ridiculous amount. They sold for 9.6 billion. So isn't that an indication that we're at the top as well? Big players exiting?
That with all the crypto stuff, the Genius Act that's like almost passed, all the different crypto regulations and stuff like that, it seems like we're in euphoria phase. But it's over. All right. So Peter, you cut that clip there. And then we're going to start the next clip over here about how that's not the case. How that's not the case.
All right.
So if we were to take a look, let's just take a look at
Just before you jump into that, Tom, we have a question in the chat from Jikontar, who's asked, "Hello, when will we have the strategy from yesterday's live?"
Oh, well, it wasn't like done. We're just experiment on it. The better version is the one I put on the previous live, but I'll put the link again. I'll update the script to the newest code, and I'll put that there as well.
So when?
So I'll put it right after this stream.
All right. Thank you, Jikontar. Appreciate it. All right, go for it, Tom. Give me hope. Give me hope that Bitcoin has more to go. Money, 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 baby.
So we are in the process of, not only is Bitcoin, let me show it to you here like this. Okay. So right now, this is a Bitcoin chart on the daily. And as you can see, we have this channel that was formed, this channel here that was formed. And we know it's a channel because we have a cup and handle that was formed down here. Cup and handle, Peter, is a technical analysis pattern that looks like this. We have a cup, and then you have a handle like this, and then you blast off, generally equal to the length of how deep the cup was.
Really?
Right. For those of you who don't necessarily understand why the cup and handle works, why it's a technical pattern that matters, is because you can see it here with this channel. That the idea is here is that this is where Bitcoin was supposed to be, right? That's where Bitcoin was supposed to be. Or you can imagine that this should have continued up this way. But for some reason, economically, liquidity-wise, or whatever, it dipped down lower. And like a cork kept on the water, it bobbed up. So we're actually just regaining the trend that we're supposed to have, which means this should all be bullish. Build up, and we explode higher up. Plus, you have in a low of a cup like this, you have people shorting, right? Because they think the price is going to go lower because people extrapolate linearly, and so this explosion up happens because they get liquidated. So once the shorts get liquidated, they're not eager to get back in over here. And then the longs, after a little bit of retrace, have the balls in order to move higher afterwards. So we should get a rise up that's at least the as high as the cup was deep, which would be over here, 170,000. All right, we're not there yet. All right, hold your britches, folks. So that's just if we were to take a look at the channel here of the 1 year. This is the 1 year chart. This channel started 1 year ago in 2024, and that's what's breaking out. Now we toss on that we have this chart of a channel from the previous cycle. This is the previous cycle high and low of the channel. And you can see here another cup and handle. We fall down over here. Handle. Explode up. Right? Because this is where we should be. But because, FTX, Celsius, Luna, 3AC, we went down. We went down in the dumps for a while. So this channel is happening. This, what we had over here in 2024 to 2025, we had a retest of that low. That's how we know that this low is valid, because we had a retest of it. We came back up into that channel. You see over here, Peter, how we tested it over here, the top of the channel.
Yeah.
And then we tested it again over here to confirm the support. That means that this level over here is an honest to goodness level. And this top of the channel, we can see over here that you see how the price came above it and then bounced again off the top of that channel.
Yeah.
Then moved down in that cup and handle pattern that we saw before, and then moved out. This is showing that this channel, excuse me, this is showing that this chart now is filled with orders, like liquidity, buyers. Mm-hmm. So much so that when we came back in, we didn't even get down to the bottom of the channel. We immediately broke back above it, confirmed it again, and now confirmed the retest. So that means we are breaking out of a 1-year pattern and a 4-year pattern at the same time. Boom. Tell me that's not bullish.
Is that unusual?
We just started that. One more time?
Is that unusual? Has that ever happened before?
Sure. It happens in things all the time. All the time. All the time. Things that go up all the time. Let's go to Meta. This sort of drop, explosion up. It's a common pattern that we see. Remember
the 1 year, 4-year breakout simultaneously.
No,
is this an unusual event?
Right. No, that's like a Uranus retrograde on a Mercury return. It's like pretty crazy.
Happens once every 26,000 years.
That's right. So we have that. We also have. Let me see if we can pull this up for you. This is a little treat. This is a little peek, you guys, to something that I built for you to see. All right, this is a trend. So this is my trend indicator. And we'll take a look at this on the 3-month time frame. I love thinking in quarters for Bitcoin. Very useful. And you'll see here that the cycles are generally pretty well defined. So we have over here, this is the first cycle that we saw, yellow to green. The cycle ends with this red area, bottoms. We get the green rise up again, turns to yellow, then red for the bottom of the cycle. Rises, this was a mini cycle that we had because of COVID. You can consider this to be all one. We drop, and now we're rising again. So right now, we're not seeing on this trend, which is calculating volume-weighted average price, this is VWAP trends, on a 3-month basis. We're not seeing any indication here of any red showing up, not even yellow, right? We even just switched back to green. So this is telling me that we are still in this process.
You say not even yellow, but I see yellow right there. Yellow and green, yellow and green.
Well, it switched from yellow to green.
You said we're not seeing any. When you say we're not seeing any red, you mean
on
going
the flat
forward
over here.
Gotcha.
Yeah. And we're exploding it up. And generally speaking, when we cross the previous high, we're usually about halfway through the cycle. Right? We cross the previous high, we're about halfway through the cycle. And now we cross the previous high. This would be halfway through the cycle, which means we should expect a cycle top around earliest 270.
Ooh, ooga booga.
Peter, I can go on and on and on and on and on. There's all kinds of reasons why Bitcoin should continue to explode higher. But look, we only have so many hours in a day. So let's just get a word from our overlords before we move on to market minutes.
Ask yourself this. Are you making trading harder than it needs to be? If you're trading manually or still coding just to connect to your broker, yeah, it's time to upgrade. Traders Post lets you automate trades using signals from tools like TradingView or TrendSpider or even your own custom setup. It works with brokers like TradeStation, Tradeovate, Coinbase, and a bunch more. I've been using it myself, and getting started was smooth. The platform's clean, setup's quick, and once it's running, it just works. And when you're ready to scale, adding more strategies, plugging into prop firm accounts, or juggling multiple portfolios, Traders Post handles it. It's built to grow with you. Start your free trial at traderspost.io. Trade smarter, automate your edge.
I think you got Adventure Trader excited there. He says 270. I didn't hear. That's a fun number. That's the first time I've heard that number. All right, go ahead, Tom.
270 at the very least, folks. That's not even counting what could happen. I actually think, I don't even want to go into that. I actually think that we're about to have a breakout of a breakout. Remember, all those other breakouts in Bitcoin, all those other cycle stuff didn't happen during a fourth turning, weren't happening in these situations. We're having once in a generation events happening again. How many times can you think about and say that and go, oh my God, what is going on, before you realize that you were born in special times, my friend? Special times. And what would be the most special is that everyone is expecting a cycle top for Bitcoin to happen exactly like they expected before, in 164 days from the low, exactly the sort of price level that they're expecting. And the crazy thing that would happen is either goes to zero or goes to Michael Saylor level of prices. So what we're actually experiencing is a bull flag in Bitcoin that could break up, and that the entire run of Bitcoin till now can be what we add to Bitcoin. What could that be? I don't know, but it means you don't have enough Bitcoin. It means you don't have enough Bitcoin. All right.
Not financial advice. Do your own research.
Oh, God, no. I mean, Bitcoin is a Ponzi scheme. I'm not sure if I ever mentioned that. And Michael Saylor is a false prophet. I don't know. So I said good things and bad things. Take that for what you will. All right, a couple of market minute news that we had over the past week. So we know that in the big, beautiful bill, Trump did announce new tariffs on over 20 countries. But in true tackle fashion, it is if they don't acquiesce to trade deals beforehand. So who knows? Tariffs come in, tariffs not come in. The market certainly doesn't care. We had June inflation data that shows a slight uptick in consumer price index. It rose 0.3% monthly and 2.7% annually, matching expectations, but signaling potential tariff-driven price increases, reducing expectations for immediate Fed cuts. Crypto legislation stalls in the House. The Genius Act, it almost passed, and that might be one of the reasons why Bitcoin's fallen a little bit now. It fell below 117 because we were all expecting a big blast off. And of course, some Republicans decided they're going to side with the Democrats and then stall this bill out. So we'll see what happens over the next whatever. Federal Reserve minutes highlight rate cut uncertainty. The FOMC minutes from June revealed disagreements on 2025 rate cuts, with some members open to cuts by late July and others anticipating no cuts, affecting treasury yields and market expectations. Oh my God, they're infighting. They're saying things about themselves. I wonder who's going to win out. Excuse me. I know propaganda when I see it, and I thank you for it. Retail sales rebound in June. June retail sales climbed 0.6% month over month, exceeding expectations and supporting consumer spending resilience, reducing pressures for immediate Fed rate cuts. Because if there's one thing a consumer-based society wants, it's to consume. Can't cut that out. You can increase eggs by 4x. I'm still going to buy things I don't need. NVIDIA reaches 4 trillion market cap. NVIDIA market cap hit 4 trillion for the first time, reinforcing tech sector strengths and driving gains in the NASDAQ composite. Oil prices stabilized after sharp decline. Crude oil prices stabilized after $14.5 drop with no disruptions in the Middle East. Oil flows, despite recent conflicts, impacting energy stocks like Chevron. This is what I was saying before about we have the oil price coming down, and it's not like due to any geopolitical things that we can see. So that's generally recessionary. Delta Airlines boosts airline sector. So Delta's optimistic 2025 earnings outlook lifted U.S. airline stocks. U.S. Treasury yields rose post CPI data. We already touched on that. Gold prices supported by central bank demand. Central bank is the main demand for gold. Don't let anyone get it twisted. No one's buying paper gold. No prepper is buying paper gold preparing for the end of the world. This is all central bank demand. When they buy it, gold goes up. When they buy it, gold goes down. So if they're buying, to hedge against the global financial system, the stability of the system, what does that tell you? It means a crisis is coming. And if a crisis is coming, rates are going to get cut, which means up and to the right.
Okay.
Tesla opens Model Y orders in India, and US dollar rises to 4-month high, as we talked about before. Peter, the world is filled with trades and trade opportunities that'll become even more available to the common man, such as yourself, with the advent of AI. So I feel that what we're doing is pretty useful over here, because I don't feel like I'm speaking to retail traders right now. I'm speaking to your future AI agents. Like they're reading this transcript and learning what to do. So you should be just a really good trader, a really good retail trader for your future self. You click like and subscribe on his YouTube channel, and you let the AI algorithms know that this content should fuel your future trades.
Okay. That's grandiose.
It is pretty grandiose. All right, Peter, is there anything else you want to touch on before we leave and wish everyone a great weekend?
Yeah, lots of stuff. I got a whole list of things I want to talk to you about. I can't wait. I've just been waiting for you to come and point in my direction so I could just spill the beans and tell you everything that I want to be talking about. There's so much, okay? Are you ready? You're going to get started? You're going to get ready? Here we go.
All right, great, folks. So that was a great recap, Peter. I love that. I think we had a glitch in the stream and maybe we lost a little bit of it, but we all, you can get it later on. You can go on your Twitter and find that out. I will, as always, wish you, Peter, and our audience happy trading.